Morning, Fractal Effects team. We're just in a morning setup, but make sure you read the disclosure on our website, fractaleffects.com. It's in the footer section. If you're following along with us today, make sure you do in a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. Just going to jump right into it. So we had a runaway market today. That's where we have one quick tap. We leave the NYC fair value gap, becomes a breakaway gap. It never gets filled. And then it just keeps pushing. And right around 10 o'clock, there was this fair value gap, tapped. And that's previous day's high right there. Now with the US 500, that's got a further way to go. But we're actually in this trade setup, and we're only deciding to go 1 to 3. So whichever one happens first, either that gets tapped or that gets tapped. And that's how, that's my method of preventing that divergence from messing us up, where one asset is weaker and needs to take liquidity and the other one doesn't. So if NAS takes liquidity, then we'll just conclude that trade as well. We're about 2 minutes away from the range formation as well. So I'm hoping as soon as it crosses here, we get our bullish confirmation, retracement, and then extension. Let's see if we can't get it in this next push. So 46 seconds left for our range formation. One last little push. This measurement's off. When I checked my TP, it should have been 1 to 3. So it's marked up wrong on the chart, but it's actually a 1 to 3. So we've already taken partials at 2. Our 2 was here. It's already a safe trade. And then our 3, just a little higher actually. But either way, right there. That's good enough. I believe we just crossed it. Yeah, tapped it, good enough. And then NAS is about to cross previous day high. We're just short of confirmation. I would like to see just the perfectionist in me. I'd like to see it cross that, even though I've exited. That was close enough for me, but also obviously here, cross that previous day high before it begins its retracement. So we'll go, there you go, that's the cross. So we'll go over this trade while we get a confirmation. Still got 2 minutes, 39 seconds before this confirmation sticks, if it sticks. So I've said this before, I'm not a fan of runaway markets. They don't give you a good foothold. So excuse all this mess here. You know what, maybe I'll switch over to a different chart. A cleaner chart. So we had a downside expansion model. London set the low, bounced off the blue zone, bounced off of Asia fair value gap, and then kept going. So at open, we had a double break to the upside. So there's our manipulation range low all the way down here. And our manipulation range high is right here. A little hard to see. I'll zoom in. Oops, sorry. It's right there. Asia high. Technically Asia high is kind of covering it up, but it's right there. Maybe in the next rendition we'll make it a little longer or thicker. These lines are a little hard to see at times unless you zoom in. So anyways, that's our manipulation range high. Couldn't have been more of a easier setup. What we did was right at open, we took that high. Then the next candle became a single candle double break where we took out the low of this opening candle. So the 935 candle swept the low, broke the high. Then this becomes our area of retracement, our NYC fair value gap. But as you can see, it never retraced there. It just kept going and created another fair value gap and another fair value gap. So then when the NYC fair value gap becomes a breakaway gap, meaning it never gets touched, the market is extremely bullish. And once it starts leaving these 5M fair value gaps, now technically you can take any one of these as long as you're heading towards, you know exactly what your target is. In this particular case for us, it was the previous day high, also the 4-hour high. But since we didn't tap any one of these, this is the first one that it tapped, which is also the first one created after 10. So this was the only one that the market actually came into and even gave us any kind of a foothold. And on a smaller time frame, on the 1M, we tapped it, hit the 20 EMA, gesticulated for a bit, created our first fair value gap here, also didn't get tapped. Second one tapped, but we took it on US 500 just because there was a way bigger room to get to previous day high. And as mentioned before, that's kind of my maneuver to get around divergence. So whichever happened first, my either my 1 to 3 risk to reward got hit first, or NAS hit previous day high and took that liquidity. That was going to be my exit point, whichever one of those came first. And obviously this one came first, so we exited. Because for all we know, this could take liquidity and then start pushing down. There you go. Now it's just took liquidity. Even though we have a bullish confirmation, and even though this thing could continue to run, now it becomes a bit of a harder fought fight where we're trying to figure out where the next liquidity is. So we just took previous day's liquidity, which was also the 4-hour liquidity. The next 4-hour liquidity is all the way up here, so it could get all the way up there. But this is the better run, all the way to previous day high and that 4-hour liquidity. So we'll keep an eye on it. Now we'll see if we retrace. Again, very, very bullish today. So may or may not. But we got 2 minutes left. Let's see if this fair value gap stays open. It could use this fair value gap. We haven't retraced back to the 20. When it comes to the spotlight strategy, I'm even more of a stickler for hitting that 20 and balancing out that price range before it pushes up, because as I mentioned before, this thing is a heavy, heavy runaway market. I suspect that US 500 will take out previous day's high, just because when you look at the 4-hour, we got small wicks. When you got small wicks like this, it's most likely going to just run right past these. If these were long wicks, like for example here, then you can actually take a Fibonacci on this and use the consequence encroachment as your take profit, because it might just bounce off the consequence encroachment at the midpoint of that wick and bounce. But here, since we've already taken previous day high on NAS, I assume we'll most likely just pull this up as well. Now, if you're asking me, since I kind of saw that setup, why didn't I just set my take profit up here and ride, instead of getting a 1 to 3, hold on, sorry, this box tool. Instead of getting a 1 to 3, why didn't I just go for the 1 to 6 or 1 to 6.87? Because that's not my rule. Remember, this is not about being greedy. If you want to get greedy, then you're better off gambling. Better off buying a lottery ticket. This is not what this is. If you want to look at this as a career, I can't stress this enough. Your goal should be a nice risk to reward, and that's it. And then once you've set those rules, follow those rules to the T. We are profitable traders. We are high probability traders. There's nothing wrong with that model. So if it's not broke, we're not going to try to fix it. We are always consistently profitable at the end of the month. That is why we are not taking any long balls up here. You could even ask me like, well, why don't you just move your stop loss to break even? And after that 2 partial, why don't you let a runner? That's fine. Like again, if that's in your rules, then by all means. And we do say that sometimes at the end of a trade. You know, if that is your strategy, I say if that's your strategy, go for it. That's just not mine. And that's just not the one that we like to teach. Because you're giving up some profits there. Instead of taking a full TP, you're technically doing a 1 to 2 risk to reward, and then you're hoping that the rest of it runs. If you're comfortable with that, great. But here, while we're teaching you, we're going to teach you obviously the most safest path. As mentioned before, the next iteration of the blue zone indicator we're going to have another zone painted. It's the DSD, Daily Standard Deviation. And how it's calculated is way different than how the spotlight indicator measures its standard deviation. So, and that's what, let's go back to that other chart, even though it was a little sloppy here. Right there, DSD, not to mention the 4-hour fair value gap. So there was a 4-hour fair value gap here and our DSD high. And that is exactly where that single candle double break came back into. Came back into our DSD and tapped the 4-hour fair value gap, which runs right under it in this purple. And then that red one that you see is the Asia session fair value gap. A lot of points of confluence here. So remember, when we get a double break, we pull back into one of our key zones. Our key zones are the blue zones, purple zones. That's the NYC fair value gap, and it's the DSD, which is going to be, again, on the next iteration of the indicator. So that single candle double break tapped this zone. Now keep in mind, I'm not a fan of that. As mentioned before, that's not enough confluence for me. A single candle double break into this zone after we get the double break, single candle or double candle, after we get the double break is when I want to see my retracement. So then after we got the double break off this key zone, this right here, I'll get rid of this, that was our NYC fair value gap. That was the zone that I was interested in seeing get tapped. This was the first 5M. I was waiting for it to come back down and tap it, but it just left this string of fair value gaps, these runaway gaps, breakaway gaps, I should say. And we call this a runaway market. So now that NAS has taken its high, or previous day high, now we're getting this retracement. I'm going to get rid of all these string of fair value gaps here. Ideally, I'd like to see it take out this low, the low set after 10 o'clock. I don't know if it will, as mentioned before, extremely bullish, but since we've already crossed previous day's high, I think it's going to give both markets a nice pullback. Where's the, oh yeah, sorry, that's the, get rid of this one. And that's the same fair value gap. So this fair value gap and this fair value gap are the same. They're both set after 10 o'clock, and these are the first 5M fair value gaps that were tapped during this runaway market. Right around 10 o'clock, the first 5M fair value gap after 10 o'clock is usually, like if you have a severely, severely bullish or bearish market, that's a runaway market. It made the NYC fair value gap breakaway gap. It just kept going, didn't come back. Usually right around 10 o'clock, or the first 5M fair value gap created after 10 o'clock becomes the major or the main focus for that pullback. And that's exactly what happened today. It's not for the faint of heart. Because again, when you have this many fair value gaps, and let's say the market did dip, you got to proceed with caution. You have to trust your bias. You have to know exactly which direction you believe that the market is going. You have to stick to that bias. And make sure you put in your stop losses. You're going to get rid of this since that's already complete. Or rather, maybe we'll go over another review afterwards. I'll just push this to the side for now, but I don't want it to get confused. So here's a fair value gap. Now I'm going to lay down a Fibonacci since we have such a big range today. So the 20 EMA is right around our 50%. But we have all these fair value gaps that it could react off of. Now when there's this many fair value gaps strung together, I like to just take kind of the mean measurement here. What is there one here? Still more interested in the US 500 since we haven't taken previous day's high yet. So that's the mean consequence encroachment right there of all of those. And the 20 EMA is all the way down here. Ideally, I'd like to see it hit the 20, but again, when you're this bullish, it could take any one of these fair value gaps and just continue pushing up. This is why you want to have both of these open. You want to make sure that you're watching for that divergence. If we sweep the lows formed after 10 on NAS, which we're a lot closer to, then there's a good chance this can pull all the way back down and hit that 20 as well. But as you can see right here, as soon as this 1035 candle crossed previous day's high, that's exactly when we started that retracement, which would have ate into our profits. That's why that was my, I mean, I could have set technically my take profit a little higher. As mentioned before, it was whichever came first, 1 to 3, or this gets taken. So we just hit the mean consequence encroachment of all those breakaway gaps. So you're going to see some kind of a reaction here, but ideally I would like to see if it pulls back to the 20. And now this is how you can also use divergence. Right now we're well below this bullish 5M fair value gap, and we've already created a bearish 5M fair value gap. So since we closed below, and there is no other fair value gap other than this one and this one, then the market could push down. And if it can, then it'll take this, it'll take the US 500 with it. But we'll see. Now that we are at this midpoint, I will drop down to a 1M just to see what we're doing. So we bounced off the 50, we've created a 1M fair value gap here. Let's see if it taps it. Now the inducement for this is all the way up here. So ideally I'd like to see it cross here first and then tap one of these fair value gaps. That's the first one created, so I'm going to mark it out. Let's change the color here just so we can see it. but we're still between the 20 EMA and the 50 EMA, with our inducement being all the way up here. Let me change this to white. Remember what inducement is. Inducement is the last pullback. So this is all one leg. Right? So that went up, this came down, and then that was up, and then that's where the leg started. So if this thing is going to be bullish, it then has to take inducement, then tap a fair value gap, and then push up. Otherwise, it could just keep pushing down. Just got to be patient. Just watch. So we're bouncing off of that fair value gap. I'd like to still see it take inducement first. I want to see it take this high, even if it just wicks it. And then I want to see which fair value gap it taps after that. Well, there's this many string of fair value gaps. I need to see more confirmation, more confluence. This would be a good entry now that we started creating breakaway gaps on the 1M. That'd be a nice setup. Let's get rid of some of this stuff here, this markup. Just trying to get a push here as well. See if it uses this inverse fair value gap to get over and push. We want to see this candle close above. You just go back up to the 5M here. Let's move this over. Same thing here. We want to see the market get over this 5M fair value gap. The quicker we get up here and take this inducement, the better. I don't believe we left a 5M fair value gap here. No. Closed it off. Got 4 minutes, 23 seconds left. About 29 minutes left in our stream. We had a string of 1M fair value gaps here. I want to get over this inducement here. We're right at that 20 EMA again. This is where you don't want to be. You don't want to be wedged between the 50 and the 20 EMA. So the faster we get above this and close above this and use this as a, point to push off of, the better. Same thing here. I'd like to see this candle, 5M candle, close above this fair value gap. 14 seconds left. See if we can't take that inducement right now. 7, 6, 5, 4, 3. It's definitely a good close. We want to take that inducement as quickly as possible. Right here. Sorry, I'm not sure what this is. Let's get rid of that. Still haven't taken that inducement, still getting some gesticulation here. So we have closed above that fair value gap. That's a good sign. I could come back and use this fair value gap, this 1M fair value gap, and bounce off this 5M fair value gap to head up. So we got a lot of fair value gaps here. NAS is already almost cleared. Those highs. Which I'm assuming is also so that was the inducement for NAS. This is all one leg. Yeah, that's all one leg right there for NAS. Actually, no, sorry. Started from up here, so it's already taken inducement. So I could swipe back down to hit this fair value gap, this one, and then most likely just head up now. Let's see where 2R is. Right here, roughly. So as soon as we cross here, move move stop losses to break even, take partials. What's left? All these breakaway gaps here. This one. Let's see if it taps any one of these to accelerate this push up. So NAS's, this next 4-hour high matches up with US 500's previous day high. But as soon as it crosses here, for anybody who entered, this is where you would move your stop losses to break even and take partials. About 10 minutes left in our stream. Let's see if we can at least hit this point. Turn on our standard deviations here. So 0.5 standard deviations is right at previous day high, with 1 standard deviation being just above that. But again, today, I wouldn't go looking for anything above above previous day's high. 3 seconds left. Had a bit of a pullback here and left this little 5M fair value gap right here. Very tiny. As mentioned before, about 10 minutes left in our stream. Let's see if we can at least get up to here. Please make sure you check us out on fractaleffects.com, where we teach high probability trading. Please make sure you hit the subscribe button, turn on your notifications so you know when we're live. Also check us out on Instagram, fractal.effects. We're always uploading educational material, going over certain trade setups. Right now we've actually put together the best package. You get access to market news, you get access to our indicator suite, our 20 years of aggregate on our Spotlight dashboard, masterclass, live trading. You even get a discount on TradingView. You can actually, whether or not you sign up, you can actually just go to the offer section at the bottom of our website, and there's a link there, TradingView link. You can actually click that just to get a discount, $15 off your next plan. It doesn't work if you already have a plan, but all of that's available for you guys. About 8 minutes left in our stream. I'd really like to see it get up here before we conclude. So we did tap this 5M fair value gap here. I'd like to see if we create a 1M fair value gap as soon as possible. We also have this gap open. Let's see if it wants to take out these lows one last time. Tap here, push up. So we took out these lows right now. 6 minutes left. So again, we're wedged between the 20 and the 50 EMA. We've tapped this fair value gap. Ideally, I'd like to see this market just start pushing up from here. The faster we can close above this 20 EMA, the better. 31 seconds left. Digging in deeper into this fair value gap now, this 50 EMA. Dipped into this fair value gap as well, this previous one. I'd like to see if we can close above here at least before we sign off. 47 seconds left. This will be our last candle. As mentioned before, please check us out on fractaleffects.com. Make sure you hit the subscribe button, turn on your notifications so you know when we're live. We're live currently Tuesday, Wednesdays, and Thursdays. So we will see you guys again next week. 23 seconds left. That's our time. Guys, have a good day.